Economists estimate a 1% decline in growth in developing countries pushes an additional 20 million people into poverty. And growth is expected to slow in developing countries at a greater rate than previously anticipated, from 6.4% to 4.5% because of financial turmoil worldwide. Already, the World Bank estimates, high food and fuel prices have driven 100 million people into poverty. So, to help protect the poorest and minimize cuts in government investments in basic services like education, the World Bank is tripling its lending to developing countries, from $13 billion to $35 billion this year.
In this environment, a lot of developing countries, including some of the middle-income ones, are finding it very expensive to be able to get funding. And what's most important is, I think we're all trying to learn some of the lessons from the 90s financial crisis. And we want to make sure that developing countries that have had well-run economies don't have to cut back some of the basic social spending, or if they want to keep with the infrastructure investment so that they have a platform of growth. And in some of those cases, a country may only be running a modest budget deficit, but it just isn't sure whether it can get external financing. So with some we can make loans, with some we have products like the deferred drawdown option that assure them they can get the money if need be. Then the poorest countries have a different set of problems, and then the IFC, of course, is trying to provide some of these needs like trade finance, which has just fallen off dramatically.
The Group of 20, the leaders of developing countries like India, China, and Brazil, as well as the leaders of high-income countries, is meeting in Washington this weekend. Zoellick would like global leaders to work together to help the world's 78 poorest countries, 39 of which are in Africa.
First and foremost, there needs to be a focus on the poorest and most vulnerable countries, because they're not really represented by any of the G20 countries. And so that would be, in particular, the need for countries to not only maintain their aid pledges, but to increase them. ODA, the Overseas Development Assistance, is about $100 billion. Not insignificant, but a drop in the bucket compared to some of the other financial support.
World Bank economists warn the global financial crisis has long-term implications.
Developing countries in the past 5 years, they did very well in terms of the growth. And now all of a sudden they were affected by this global slowdown. And also how to maintain the support to the vulnerable group of people to avoid the financial crisis turning into some kind of human crisis.
A World Bank paper prepared for the G20 meeting of heads of state notes that weaker growth combined with the credit crunch will mean less money to invest in education, health, and women's empowerment.